Hi everyone, this is Prashad Parthiban. Today I'm going to take a quick training on multinational insurance. So in simple terms, multinational insurance is nothing but a company that has their subsidiaries or other branches in different countries. Say if you have a headquarters in USA, they may have a branch in Europe, Canada, UK. Now if they wanted to go to different insurance companies on that particular country and they have to get the insurance, it's like a tedious process. So what happens is some insurance companies that operates in multiple countries, they can issue a policy that is called as multinational insurance policy. So there is a process how they handle this. So if you have a multinational insurance, the way the policy is structured is you'll have something like controlled master program. So it is nothing but it will have a master policy. Maybe if you have a customer whose headquarters is in USA, there you will have a master policy, right? And then for each country that this particular customer have their offices like Europe, UK, they will have particular local policies. So the reason why they need to have local policies is each country will have their own regulations and compliance rules. So it is very important that each country they have their local policies, but all those local policies will be managed by this primary insurance company. Either they will have their own branch, or if they don't have their own branch, they will work through some partner companies to establish this type of local policies. Couple of important things to note here is, say if those local policies where we have, if there are some restrictions with respect to limits, say like if you take Europe, the maximum limit we can issue is say 50k or 100k, whereas the customer needs overall 500k, right? So that can be achieved through difference in conditions and difference in limits. DIC is a concept where, say if you have a local policy and you have certain coverages or very limited coverage, but customer needed broader coverage. So those kind of gaps which you don't have it in local policy can be issued in master policy using this provision. For example, like if you have some certain coverages that are unique, right, related to general liability or workers' compensation, if those coverages cannot be issued here, you can obviously issue it to make sure that that particular coverage can be applied across all the local policies. Similarly, difference in limits also, right? Like your local policies can provide you only certain limit, maximum of 30k or 40k, whereas the customer need 80k. Using this difference in limits provision, you can increase the limit to 80k in master policies that will be applicable to all local policies. So this is the two important concept. Plus you also need to understand what do you mean by fronting policy. As I told you, the requirement is we should have local policies for each country, right? And if that particular local insurance cannot operate or they don't have enough infrastructure, they will be, as the name suggests, front face for the customer. But once they issue the policy, the entire coverage will be reinsured to the master policy. That's what they call it as fronting policy. They will have the local policy, but the entire coverage will be reinsured to the master policy. So this is what I wanted to cover in general. As I told you, multinational policies are applicable for customers who have their companies across different countries. To make sure that they have strategic or very optimized coverage, they go to one insurance company which operates in multiple countries, and they will issue a master policies under controlled master program where we will have multiple local policies to make sure that if those restrictions or those limitations in local policies in terms of coverage, we'll have this difference in conditions where you can provide any coverage that the customer needs through master policy. Similarly, if the limits are less in local policy, that can also be addressed through difference in limits provision. Plus those policies that you issue locally, you can reinsure the entire coverages to the master policy through fronting policy. Again, this is a very big topic. This session I would like to cover at a high level. Once again, thank you so much for your continuous support. Have a great day. Bye-bye.